Welcome back to the channel. I'm Foreman, and today I'm going to show you the UK stocks I bought this week. And to be honest, it's been a very mixed week. One part of the market is absolutely crashing and a lot of my stocks have fallen by considerable amounts, and the other part of the market is actually pushing up higher than ever. Well, I suppose not. Regardless, my portfolio for the week is relatively flat. The FTSE 100 is up by 0.067%. I beat the FTSE 100. The FTSE 250, however, is up by 0.29%. The S&P 500, as of recording this video, is down around 0.46%. My portfolio is only just up by 0.12%. And to be honest, this has to be one of the first times I've had a calm week. And even though I've only gone up 0.12%, this week was far from calm. The volatility overall was low, but individually the volatility was very high. And this obviously started with the likes of Argo Blockchain. If you like the video, please join one of these to help support that and beat that YouTube algorithm. And obviously it started with Argo Blockchain, which if you look in the last 5-day graphs, it will say that Argo Blockchain is a top faller. This is not the case, because when we look at Friday, that's when shares had jumped from around £1.10 per share up to 135 pence per share. This is a jump of around 18 to 20%, which had taken place, and this was due to the likes of Bitcoin. Don't get me wrong, Argo Blockchain is a very volatile stock, and so many things can push it up. But this week, it was Bitcoin. It's a nice boost to shares at the very least. What had happened with Bitcoin is that there was a rumor over Amazon accepting Bitcoin payments by the end of the year. And this is obviously a lot of fuel for hope, as that means, well, we're going to see more mainstream Bitcoin adoption, and therefore it could become a more alternate use for a currency, and therefore Bitcoin should theoretically rise or become more stable in value, which would be the end game as a store of wealth. And so this is promising in the industry for Argo Blockchain. They've also changed a few executives, but I'm really not interested in stuff like that. What you should know is I still hold 4,001 shares, and that I have no desire to buy or sell my position. Many people are like, look, now's the best time, sell, cut your losses. But there's so many short to medium term price drivers that it's really not worth myself doing this, because I could sell and then 2, 3, 4 months later, shares could be much higher. So this is one where I sit tight with, and this week I'm grateful it's gone up as my other stocks have gone down, except for the likes of Team 17. This is one that's been very quiet in my portfolio as I accumulated a few shares back a few months ago, and then I've not spoken about it much since. This is obviously a software video games developer, and they have a wide catalogue of arcade games, such as the franchise of Worms, Escapists, Overcooked, or Golf with Your Friends, which they recently acquired. This is quite a good play in my opinion. This is why I hold it, because they have such a wide range of categories that their revenue streams are diverse in the entertainment industry. This becomes interesting, but because they have such a wide appeal to their games, that they could become more family orientated, see more overall popularity. I believe in the gaming market at the moment, the AAA games are going to see more of a downfall. We're seeing these most popular games that are coming out are like indie games. I'll go back a bit, we'll have Fall Guys. I'll go back a bit before that, we had, I was going to say Fortnite, but I suppose that wasn't really a AAA game anyway. And there's also another one where you're going around, the guys that had no arms running around, whatever that was, where you would go around and do your jobs and be deceptive. That was one as well. These games become popular, and these aren't necessarily ones with the highest of budgets. In fact, it's quite the opposite. And so I feel that Team 17 certainly has the chance to really tap into this market and make a lot of money. However, these games do have a lot of short-term hype. I do believe Team 17 can use their effective management strategies and their experience to therefore grab one of these and really make money from it. And there's a lot of speculation in the industry at the moment about Team 17 because Sumo Group was acquired by Tencent. This was a big acquisition, and in fact they paid quite a premium on the shares. And so in the industry, things are hyped again. Obviously we had Codemasters, another one of the UK listed developers, bought by EA about a year ago now. And so it really is finding that there is less available investments in this industry. I mean, realistically, the ones that I'm aware of we have left are Frontier Developments, the owner of Elite Dangerous, and they make things like Roller Coaster Tycoon. There's also one more that made Hello Neighbor. I've forgotten the name of it, but I have mentioned it in the past. And there's Team 17. There's a lot of scope for acquisitions because our stocks are very cheap, or our prices or values or market capitalizations are very cheap compared to overseas, and so we're seeing acquisition activity. I'm personally not buying any more shares. This is hype, this is speculation, and I don't think it's sustainable long-term growth. Don't get me wrong, I do think eventually Team 17 could certainly be at a strong share price like this, but I think we're a little bit too early. And this happened a few months ago, and not long after, shares had popped back down. I'm going to try and use my knowledge of what I've recently acquired of patience. I'm not going to jump on the fear of missing out train like I did with Argo blockchain. I'm going to see. I'm going to build cash if there's no value available, but if shares do drop down again, I would love to perhaps build up my position bigger because it is a stock I have good conviction in, but never really had the opportunity to buy as there was always another stock that was in more value. Sign up to Freetrade, my stockbroker, and you can get free share worth up to £200 using my link in the description down below. The top faller in the portfolio is likely one you've been waiting for in this video. That stock is Boohoo, and I already may have a biased opinion on the matter as I'm literally wearing one of their branded goods. Regardless, this has been a lot. So we've gone back about a year and a half now, back to the modern day slavery accusations. 2 news articles had come out. One had suggested that the founder has now got to give evidence in the court in the US on the trial that has a fine or a lawsuit that could fine Boohoo up to $100 million. As I've said before, this is over promotions or fake promotions, as Boohoo never really intended to sell it at a retail price. And in fact, more interestingly, this was over some person buying around about $150 worth of merchandise that was supposedly around $220, and that's led to a class action lawsuit, which is interesting, but I have no complaints against that. I just wanted to bring that to your attention, as after all, there's no point discriminating against an individual customer. I don't think this will impact the business. Yes, there has been troubles before. I think their sales promotions are very effective. You always know that for most of the time, their stuff is on sale. In fact, they're constantly notifying you about it. If you have the app, that's going to say, hey, look, new promotion, payday promotion, 30% off plus 99 pence next day delivery. Or they're going to send you emails. They send a lot of marketing promotions, and so really you would likely be aware that they're going to be on discount for a majority of the time, as that's what they do. They try to hype up and get bursts of short-term payments, hence why they are doing a lot of promotions. But then when we go to the US and its whole fake promotions, it's really a grey area. Regardless, he will have to give evidence, and I honestly think this is a good thing. Whatever he does say may give more insight into the company, but it does mean in the short term the uncertainty in the markets is going to lead shares to drop slightly, as the market does not like uncertainty. I've said it before and I'll say it again, Boohoo has more than enough cash on the balance sheet. I believe it's £276 million, and that $100 million of a fine would be a bad thing, but it really wouldn't impact Boohoo too much. We've also got the likes of another modern day slavery accusation going on. Previously, it was something like they were paying around about £3 an hour to textile employees in their factories, which is obviously massively under minimum wage. Supposedly now the suppliers, not Boohoo, the suppliers, although one of them on their confirmed list, supposedly, which was not named as well, what they've said is that they were paying them the wages, they were sending it to their bank account of roughly around £8 an hour. However, they were then told to go to their bank and withdraw their portion of the payment and give it back to the suppliers, which sounds very much to me like middleman greed. Don't get me wrong, Boohoo is likely a greedy company. Naturally, in this world, if you want to get big, you've got to be greedy. But here we are, we can see where perhaps the supplier is getting a fairer payment and is then deciding that actually he wants a bigger slice, or she wants a bigger slice for themselves, and so they're going to undercut the price and then they're going to pay their workers less. Ultimately, I don't think this is Boohoo's fault, but it does have their brand on the line. And so with their brand on the line, this is certainly going to impact their reputation once more. Their reputation was never really damaged in the slightest, but there obviously was the whole boycott Boohoo thing, where there were a lot of people that were ill-educated on the matter that were really trying to push things forward. I personally have absolutely no concerns with this. Boohoo did put out an RNS saying that they would investigate these claims and that they would deal with it, and that's good. And the fact that they've even exposed the idea of how suppliers may be exploiting their workers is a great thing, both in the movements of improving ESG, or mainly ethics, but also for Boohoo. This means that they can continue to lead in their auditing process. They now know, okay, right, suppliers might be doing this, let's dive deeper. They're going to invest the capital anyway, so giving them the opportunity and really criticizing their process is only going to make them improve only make them improve more over the longer term. Sure, in the short to medium term, shares may stay stagnant. They may be volatile, they may even crash further. But ultimately, over that longer term period, right now we're paying for the chance to have a much higher quality company. And there has been things said like Shein or Shine, I said it before, a Chinese competitor could be a threat to this because at the moment they're very much going under the radar. However, the perks with Boohoo is that they are able to give you next day delivery. This is the advantage, whereas you'd order from them and you're looking at least a few weeks before you'll get your items. And then you could compare it to bigger brands, like I've had in the comment before, Nike. Nike is a big brand in the US whose main market is the US and also China. This could be a great investment, but then their market capitalization is certainly on the larger side compared to Boohoo. And we've also got to remember that Boohoo is much more in an infant stage, and at the current price, compared to at least Nike and how well they've done, this could be a very good opportunity. With that in mind, I bought more shares, and in fact I bought 200 more shares of Boohoo. After all, this is my largest position and second highest conviction stock in the portfolio. I believe in the long-term growth of fast fashion. I do believe that developments will be made in terms of ethical, social and governance, and that they're going to be pushed forward. We're going to be more focused on ESG in the future. But I believe Boohoo can get ahead of the trend, ahead of their competitors, refine their auditing and really take advantage of this, because once they've got that, all the other businesses are going to be in their rearview mirrors, and then the articles are probably going to jump at other names. Because realistically, at the moment, the reason why these media articles are specifically targeting Boohoo is because they're a big name that gets clicks. And whilst, yes, they might target other names, they've had a lot of success with it. And if anything, that's a very positive sign. After all press is good press, regardless of the intentions behind it and what perspective it may give you. And so, yes, I continue to buy. I'm very bullish on the company, but I'm also interested to see what may be discovered in the founder's interview in court. Although we also must take into consideration that this could be short-term panic, and this could understandably impact their overall profits. I think Boohoo is more dominant than that, but perhaps having their promotions scaled down in the US could certainly eat into their high growth, and it would be one to watch from, perhaps more of a bear case, which counters what I have said. I don't believe in this as much, but I do think there will easily be a loophole. But obviously this is always a threat that could be in the back of your mind if you were, for instance, interested in Boohoo. And then we've also got Games Workshop. Shares have dropped by around about 4.29%. Ashley Group has done a similar thing where it's dropped by around 5%, which is incredible to see for the likes of AHT, but it's likely just a market or industry-wide move. Games Workshop has had a big week. Their full-year financial results for 2021 were released, and blimey, they were good. So we can see there's a few things. In fact, this is pretty impressive in my opinion. Overall, sales are up by around 31%. Again, a good move. It's shown that the lockdowns in the year before, whilst yes, they were great for the business and they growed upon the financials fantastically, it's showing that people in the lockdowns have learned, you know what, I want to spend more time on my hobbies, I can make the time and I can spend more on it. This is a promising sign. Perhaps it's only a medium-term sign or trend that will start to die down, but again, it's promising. We've also got the likes of their gross margins up by 6%. Impressively, whilst that's up, the royalties are down £500,000 to 16 million, suggesting that the online sales in games at the moment, because obviously the big release is coming this year, nothing's really happening. And to be fair, that's a good thing, because it's showing even though royalties, which could easily boost up their overall profit margins because the more royalties they have, it directly translates from revenue to earnings. What they're showing is that they're still growing their business organically and very well. And then the second most impressive thing is that their profit before tax is up £61 million to £151 million. And that sales in North America had grown or changed by 39%, which is already their largest market dominance. And it's showing that they continue to dominate in the US. Whilst yes, the UK and Europe were slowing behind with double-digit figures, around 15 to 20%. What we're seeing is that they've got very strong growth and that they are becoming a very much more known hobby, and I'm very happy to be invested in these shares. There was also a great breakdown of how the business is run and really like understanding the business on details I have not seen before. So if you're interested in that, I highly encourage you to check out Games Workshop's RNS release on their full year financial report, and you honestly will not regret it if you're interested in learning more about the company. This is one that I'm not buying just yet. Yes, they've shown that they've got great success in tapping into the US markets. And no, I'm not in any way bearish on them. In fact, it's my highest conviction stock. But this short-term move is not enough for me to buy more shares, especially whilst my other position, Boohoo, is down quite significantly. My capital is going to be allocated to Boohoo. I've got to take advantage of this dip. But for instance, if Boohoo was up and Games Workshop went down, then without a heartbeat being skipped, I would certainly be buying more GAW. There's also the likes of their subscription service Warhammer Plus coming out at some point, and I will be interested in that too, and I will be trying it out to see whether it's truly worth it, and this kind of due diligence would hopefully boost my conviction further. I've still yet to visit a Warhammer store, although I plan to do so in the more short-term future. If you're interested in my free UK stocks to buy in August 2021, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.